Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. It has been obvious here, as elsewhere in the grains, that the market had moved sideways to lower from early July until mid-August. The problem is that we've had two competing patterns vying for the market's attention. The first pattern was a July to September triangle come wedge pattern, pointing lower, enough to be considered a wedge, but as I see it, not completely out of the triangle class. This pattern had been breached on both sides with false breaks, but saw a final break higher in late August. Then there was the second pattern, the late July to early September bear channel. This one looked actually better at the time. Thus, we've already seen the market reach the primary target for the triangle, and we now have the secondary harder to reach target X1, just a little above the current market in the 360 area. Additionally, we also had the target reach for the bull channel and exceeded. As elsewhere in the other grain markets, the declining short medium moving average, currently 331, had for a little while in early September acted as a resisting trend line, but was broken, and in the process created another pattern, which is also seen elsewhere in other grain markets, an ascending wedge pattern, currently 341 to 356. Over the last 2 weeks, the rising market reached up, tested, and broke the 50% Fibonacci line for the whole of the 2022 move at 348. Now, here is where it starts to get difficult. You see, unlike the other grain markets that I've looked at, the long moving average here in Paris wheat, currently at 336, is reasonably well below current traded levels, and is right now acting as a support. This is a unique situation in the grains. What was not unique is that above we've had the medium moving average, currently 343, arching down, trying to reinforce the 50% Fibonacci line at 348 and not managing it, and indeed this week acting as a declining support trend line. Overall this week we've seen the market stay within the ascending wedge pattern. Overhead, beyond target X1, we have seemingly little resistance above, including a gap to be filled between 359.5 and 360.5, until the 50% Fibonacci line, the recent May to August move at 369, and that doesn't look that strong a resistance, with better resistance between about 375 and 390. However, the market has seemingly been reluctant to try higher just yet. Just in case, I might just preempt any attempt higher by placing some possible targets topside for a true break higher from this ascending wedge pattern. Therefore, primary target X would be in the 384 area, with a secondary harder to achieve target X2 in the 403 area. It may be early to place these, but we shall see. London UK feed wheat. Some of the action seen here since mid-July has been bearish, if not very clear as a pattern. By that I mean we had one of two patterns constructed, either a shallowly bearish channel or a narrow but also shallowly descending broadening wedge pattern over July to early September. It depended upon your point of view which you saw. I'd prevaricated on which to choose, siding towards the bear channel idea before accepting the descending broadening wedge pattern. Interestingly, what's different here compared to the other grain markets is at once manyfold, and at the same time key to the future, though it does ultimately not detract from the commonality we've seen in the recent patterns elsewhere. For example, the short medium moving average, currently at 271.20, did act here as a proxy for a resisting trend line during August, and was also pierced as we entered September, but then started to actively act as support. In that time, it has not only been within the lightly descending broadening wedge pattern, but became actively engaged with the market. Additionally, the long moving average, currently at 277.70, is in the wrong place by quite a distance compared to the other grain markets, as it rose up into the wedge pattern instead of being above the activity. And whilst I speak about activity, also becoming actively engaged with the market since mid-July, initially as support, then as resistance, and more recently as more distant support again, guiding prices higher. This leads to another point. In this market, we've not had any dead crosses here. None. Something that's been evident in the other grain markets. So, whilst there has been bearish pressure here in July and August, it has been in a different form to that seen elsewhere, and without the benefit of the lagging indicator of a dead cross or two. It is therefore, I suppose, no surprise to see the upside of the descending broadening wedge pattern tested and then broken in mid-September. However, there was not that much of a free zone above compared to the other grain markets, as prices almost immediately started to test yet further resistances. These were the neckline from the original head and shoulders top, currently at 280 even, the 50% Fibonacci line of the whole of the 2020 move so far at 283.70, and a declining medium moving average currently 277.70. Interestingly, the attempt higher here was more advanced than elsewhere, as prices broke above all three of these resistances 2 weeks ago, and last week broke clear of them, leaving a remaining pattern, a bullish one that is still operational. The mid-August to date bull channel, currently at 279.5 to 296.65. Now, despite the upper bull channel line being breached, it is still intact, mended itself, and is the current pattern that is directing the market and the bullish incentive. This week has seen a retracement back down. Lower bull channel line, almost but not quite setting up the scene for a weekly key reversal down. And in all that while, still remaining within the bull channel. So it's worth considering two final points. Point one. The targets for the break higher from the descending broadening wedge pattern are for a primary target that has already been achieved, though with a harder to reach secondary target X1, which is still live in the 294 3/4 area. Secondly, and finally, for gapping higher move 2 weeks ago, we had a weekly key reversal up. An interesting thing to finish off with, and something that may lead to all sorts of interesting possibilities in the future. However, whilst last week was a follow-on higher, this week has been, at the very least, a pause and a possible reappraisal of the upside. We have, after all, closed this week below the 50% Fibonacci line for 2022 at 283.70, though we are still within the bull channel. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.